Hi everybody, welcome back to Foreign Currencies with Scott. So today's airing is on Sunday, December 14th. And we just went through a whole week where we were very disciplined to our model. We've been talking about that the last couple of videos. And what that disciplined approach got us to was no trade opportunities for the week. So that's good. For right now, we're just going to follow that discipline and not worry about anything else about whether we're trading or not or how it's going. We're just going to be focusing on following that discipline. So we did a real good job this week. No perfect trade opportunities were available, so we didn't take any. So I thought today, rather than show you the the New York close and the movement of the pair through the day, we would talk about something particular to December in the foreign currency markets. Now, if you've been with us for a while, or if you independently know, the markets are open 24 hours a day, 5 days a week. So we do take off 2 days for the weekend in this market, but it is open 24 hours a day otherwise. Now, it does this by having certain markets open around the globe. So those markets are New York, London, Tokyo, and Sydney. So we try to do most of our trading when London and the US are open. There's a little bit of a time window there where they're both open. But the reason we do this is because the spread is so small. So with the broker that we're using, Tasty FX, the spread will typically be between 1 and 1.6 pips. So the spread, again, remember, is the difference between the buy and the sell price. So that is the money that they're making off of us just when we enter the trade. So if the spread, if the spread is 1.6 when we enter the trade, that means immediately we're down 1.6 pips and we need to make it up. So if we went into, say, a Sydney market and we looked at the spread, we might notice that it's 6 or 8. We do not want to trade during those periods because that means as soon as we enter the trade, we're down 6 or 8 pips. And when our stop loss is 20, that's over a quarter of the way, almost halfway to our stop loss. So we definitely don't want to do that. Now, the reason I bring this up is just to remind you of those facts. That's why we trade in the heavy volume markets of New York and London. So December, the month of December, is a pretty unique month for trading in the currency markets, in that what happens is as we get closer and closer to the holidays, Christmas, New Year's, the volume of traders gets less and less. And what happens when the volume of traders gets less and less is that the spread starts going up. So it's very possible that if you were to go on Christmas Eve, let's say, this year Christmas Eve is a Thursday. So a Thursday, the market is open 24 hours a day. There's nothing unusual or different about it for the market. But during the London hours, the spread might be 12. So as we're now pretty much at the middle of December, it's very important to keep an eye on spread and just avoid the days or the hours when that spread is high. Now, also just think about it too when you enter a trade and you want to get out. Now, typically we're not in a trade very long, a couple to a few hours at most. But let's say that you find a trade position that looks good and you enter it early on Christmas Eve day, and it's still there, you haven't gotten out of it as we start to wind down the end of Christmas Eve day. Even though the market is still open, the volume of trades might go down significantly as the day progresses, and therefore the spread will go up, and you will not get as much money when you exit that trade as you normally would. So that is the warning for December, or at least the caution for December. Keep an eye on those spreads every time you trade. And when you enter a trade, think about when you might exit and whether that's a day where the volume would start decreasing significantly before you get out. Okay? So we have one more good solid week here, I would say, of trading before that starts to happen. But towards the middle of this coming week and the end, do keep an eye on that. Before you make a trade, do look at the spread and make sure it's less than 2, which is what we want for our trading. Okay, so hopefully this week will give us some opportunities too, and we'll be able to look at the charts a little bit more and have some trades and have that to talk about. Okay, thank you so much for watching. See you next time.